What if you could spot a stock right before it takes off? Not by luck, by reading a pattern that shows up again and again before big breakouts. It's called the VCP. In the next few minutes, I'll show you exactly how it works. VCP stands for Volatility Contraction Pattern. It was made famous by Minervini, a US investing champion. The idea is simple. Before many big moves, a stock goes quiet. Its price swings get smaller and smaller and smaller, like a spring coiling up. Why does that matter? Think about who's selling. After a stock rises, some holders take profits. Each pullback shakes out more of those sellers. When the sellers are gone, even a little buying can push the price up fast. Traders call that supply drying up, and the VCP is what it looks like on a chart. Let's build one on a chart. First, we need a stock that's already in an uptrend. That tells us big buyers are interested in the first place. Then the stock rests. Watch the pullbacks. The first one is the deepest, say around 15%. Call it T1. The next pullback is smaller, that's T2. And the last one is smaller still, T3. Each contraction is tighter than the one before. That's the signature. Now, look at the volume, the bars along the bottom that show how many shares change hands. As the pattern tightens, volume dries up. Fewer and fewer shares are trading. That's your clue that the sellers really are running out. Draw a line across the top of the tightest area. That's called the pivot. The signal comes when price pushes up through the pivot on a clear jump in volume. That surge tells you buyers just overwhelmed whatever supply was left. Here's how traders use it. Enter as the price clears the pivot. Place a stop loss just below the last contraction, because a real breakout shouldn't fall back into the base. And since the pattern is so tight, your risk is small, while the reward can be a whole new leg higher. This isn't just theory. Here's a real one. Mercury Systems flagged as a VCP right at the pivot. And here's what happened after the breakout. The same pattern shows up across the market, week after week. Quick recap. 1. Start with a stock in an uptrend. 2. Look for pullbacks that get smaller each time. T1, T2, T3. 3. Volume should dry up as the pattern tightens. 4. Buy the breakout through the pivot on strong volume with a stop just below. Scanning thousands of stocks for this pattern by hand takes hours. That's why we built VCPstocks.com. It screens the market every trading day and hands you the setups that match. Link in the description. Remember, this is education, not financial advice. Always do your own research.